have a robust stock market without a robust banking sector? Judging by the hideous action in the bank stocks yesterday and today, although, of course, they're screeching higher tonight because of this Gilead potential breakthrough. I'm sure Scott Wapner will be talking about that at 7 o'clock. We got a question we got to ask. One after another of these fantastic bank companies have seen their stocks cascade lower. An extraordinary move considering that the banks have oodles of cash and I think are reporting pretty good quarters. This is the one industry that's in much better shape than when we were headed into the Great Recession. They are selling off because of the pandemic, not because of greed or foolishness. Back then, the financials were ground zero for the collapse. Now they're simply the conduits for the federal government's decision to try to put money in your pocket for the stimulus. Plus, given their gigantic deposit bases, you might think they have everything they need to get through the lockdown relatively unscathed. But the other day when J.P. Morgan reported Jamie Dimon, CEO, made an offhanded comment. I'm just going to quote it. A rational plan to get back to work is a good thing to do, but it won't be May. We're talking about June, July, August, something like that, end quote. Oh, my God. Since that comment, the bank stocks have been on a relentless decline, and I don't know if what the president said earlier in the show is going to change that. Here's the thing. Whether or not you think it's a good idea to reopen next month, we need lots of testing, lots of masks, a workable system for contact tracing that's up and running before we can safely end the lockdown. Oh, and, of course, we need the Gilead drug, remdesivir, to work in a controlled study where it's up against a placebo. Without a break like that, well, Jamie Dimon doesn't see us getting there until early to late summer. Obviously, I hope he's wrong. And the bank stocks are soaring in expectation that he is wrong, that Gilead got a drug that can cut short a hospital stay. But if there's a prolonged lockdown, then I think the banks are in trouble. Their bountiful reserves really aren't that bountiful. And a multi-month quarantine where millions of Americans simply don't have the money to pay their debts. One of the big changes since the Great Recession is that we're much more sympathetic to borrowers in this country and much less sympathetic to the banks, who still have a hangover of what they did in 2007 and 9. If the economy is going to stay on ice for 3 months more, I can't imagine people will keep paying their rent or their mortgages or their credit card bills in unison as they always have because they're worried about their credit. I can't imagine retailers paying their interest. It's kind of like a 3-month-long bank holiday, except the holiday's at the expense of the banks and the shareholders. I know they've already volunteered to get rid of their buybacks, and those are all gone. But if Dimon's right, they may need to say goodbye to their dividends, too. It wouldn't shock me if the government says the banks need enough capital to cope with a 3-month hiatus on debt repayments. I think it's unfair, but they can do it. So many companies in travel, leisure, entertainment, dining, and retail are closed. There's no way that everybody can pay. So, same goes for the 5 million people who lost their jobs last week, with the 22 million altogether. Now, some banks are better prepared than others. Morgan Stanley has a pretty transparent book of business. And once it's merged with E-Trade, you have what I call a very asset-light financial with a huge embedded fee base. Talked to James Gorman this morning, the CEO. I liked everything I heard. Doesn't matter the stock market, though, as it trades like all the other major financials with much riskier books of business. When I look at Wells Fargo in particular, I just don't like what I see. A lot of loans I suspect will go unpaid for the next 3 months, particularly oil and gas loans. Wait a second. And why should that stock yield 7.59%? That's a tell. Goldman put up a darn good quarter. And despite the downturn, Bank of America, Citi, and J.P. Morgan, they reported good numbers. Now, there's a silver lining. If people can go back to work soon, they'll be expected to pay their bills. However, with most of the retailers being crushed, aside from Walmart, Costco, Amazon, Lowe's, and Home Depot, and the airlines have been obliterated, it may just be the bank's time to serve as the proxy for the economy's weakness. It's too bad outfits like Goldman and Morgan Stanley are really crushing it. Nobody cares. They're banks. So without the miracle treatment, sell them. We want companies with dividends that can be raised, not payouts that might be cut. And most of all, we want companies that can, actually get paid for their services rather than being stiffed by debtors who can probably get away with it because this time it's not their fault. That's the banks. No wonder they've been hit so hard. They got to hope that remdesivir works. If not, people just go right back to selling them after they rally in the morning. Let's go to Archie in California. Archie.
Hey, Jim. It's Archie from Palm Springs, California.
All right. What's going on, man?
Yeah, I wanted to ask you about SiriusXM. The symbol is SIRI.
Yes.
I recently bought it since it seemed to bottom out last few weeks, and earnings are set to report next couple weeks on the 28th, and analysts are looking for a 5 cent per share, forecasting 5 cents per share versus 3 cents per share from the same quarter last year. What do you think of the company going forward?
I'm worried. I'll tell you why. Because in the end, it's a play on cars. It's a play on cars being bought, play on used cars, and a play on driving. And if you don't do all those as much, then you will not re-up your sub. That's a worry for me. Let's go to Mike in Texas. Mike.
Big booyah, Jim from Dallas, Texas.
Good to have you, Mike.
Okay, long-term holder of Big Pharma, but I recently added some Biogen for some biotech exposure. Earnings are flat. There are questions over the pipeline. Company has low debt, high return on equity, trading at 10 times earnings, has been in a 6-year trading range. Am I mad or do I make money?
No, you're fine. I mean, look, you got to have the Alzheimer's drug pay off. The segment is red hot. Regeneron's up. Amgen's screaming. Obviously, Gilead, if they get this remdesivir through, that's going to be big. And this group trades like an ETF. So you're going to go up just because it is in the biotech ETF. Lot to digest here tonight, isn't it? Wow. President saying we're going to open soon. Gilead maybe letting him do it. Stick with Cramer.
Don't miss a second of Mad Money. Follow @Jim Cramer on Twitter. Have a question? Tweet Cramer. #MadTweets. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.